The entire story of India's banking system, it actually starts with something you've probably got in your wallet right now. We're going to trace that journey from a single rupee note all the way to the top of the financial pyramid. Let's dive in. So let's start with the money we use every single day. I mean, think about it. Those notes, those coins, they're not just paper and metal, right? They're kind of like little messengers, sent from the very top, telling us a story about who's really running the show.
And honestly, if you've ever just taken a second to really look at a rupee note, you've probably already seen the answer. It's right there, hiding in plain sight.
Yep, there it is. That emblem, it belongs to the Reserve Bank of India, the RBI. And this isn't just any bank. The RBI is what we call the apex bank. It sits right at the very top of the entire financial system, and it's the only one with the power to print our currency. Okay, so the RBI is the main architect, the big boss. But what about the places we actually go to? Our local bank branch. That's where this huge system meets the real world. And they all have one fundamental way of doing business. I mean, have you ever really stopped to think about it? How does your bank actually make a profit? You put your money in, but how do they turn that into their business? Well, the core idea is actually pretty simple. It all boils down to a pretty simple three-step process. First, they take in deposits from all of us. Second, they lend that money out to other people who need it. And third, and this is the key, they make their profit on the difference. They charge a higher interest rate on the loans they give out than the interest rate they pay you on your deposits. That gap, that's their bread and butter.
Now here's where things get really interesting. Banks don't just have one big bucket for everyone's money. Nope, they've got different types of accounts, like tools in a toolkit. Your basic savings account, that pays you a little bit of interest. A current account is perfect for businesses with lots of transactions. But if you've got a lump sum you don't need to touch for a while, a fixed deposit will give you the highest return. See? Each one is designed for a different need.
Okay, so let's zoom out a bit. Because your bank, the one you go to, it's really just one branch on a much, much bigger family tree. The whole Indian banking system is incredibly diverse, with all sorts of different players, each doing their own thing. But it wasn't always this complicated. The system we have today, with all the ATMs and banking apps on our phones, well, that's the result of a long journey, one that started over 200 years ago. You can pretty much break down India's banking history into three big phases. First, there was this really long, slow beginning, starting way back in 1770. Then came the nationalization phase, a huge shift where the government took over major banks to push for social progress. And finally, you have the reform phase starting in 91. That's the one that brought in all the modern stuff we rely on, like ATMs, net banking, you name it. So, after all that history, what we're left with today is a system that's basically organized into four main types of banks. And each one has a totally different job to do. All right, so first up, you've got your commercial banks. These are the ones we all know, right? Like SBI and the big private ones, they serve pretty much everyone. But then, on the other hand, you have cooperative banks, and these are a whole different ballgame. They're all about mutual help, focusing on specific groups like farmers or local artisans, giving them access to loans at lower rates. And it gets even more specific from there. You have development banks, which are all about funding huge projects. Think infrastructure, new factories, that kind of thing. And then you have specialized banks, which have a laser-like focus on one particular area. So, for example, the Exim Bank is purely for exports and imports, while NEBARD is all about agriculture. It's a way to make sure money gets channeled into really specific parts of the economy to help them grow. So, with all these different banks running around, you have to ask, who's in charge of this whole complex family? Well, that question takes us right back to the beginning. We're zooming back out to the very top, to the system's ultimate boss, the RBI. Yeah, the RBI really is the bank for all other banks. Its main job is to guide, help, and basically keep an eye on the entire system to make sure everything is running the way it should. And to pull that off, it has four really, really important jobs. Okay, function number one, and it's the one we all see. Printing money. Simple as that. Almost every single currency note you see out there, it comes from the RBI. Next up is its second function, and this one is probably its most powerful, and that's controlling credit. See, by changing interest rates, the RBI can basically decide how easy or hard it is for anyone to get a loan. It's kind of like a thermostat for the whole economy. If things are getting too hot and prices are rising too fast, they can crank up the interest rates to cool things down. And if the economy is slow, they can lower rates to get things moving again. It's a non-stop balancing act. Third, the RBI acts as the government's personal banker. Seriously, both the central and state governments keep their accounts there, they take loans from there, and they get all these services for free. And its fourth big role, it's the banker's bank. It's the place all the other banks turn to for advice and help. And crucially, if a bank gets into serious trouble, the RBI is there as the lender of last resort. This is what keeps the whole system from falling apart. All right, so we've looked at the whole picture, right? From the RBI at the top all the way down to those super specialized banks. But what does all this big, complex system actually mean for you? Well, the answer is probably in the palm of your hand, or at least in the things you do every day. Because at the end of the day, all that history, all that structure, it's all supposed to lead to one thing: making banking easier for all of us. I mean, think about the ATM. That convenience is a direct result of those reforms that kicked off back in the 90s. Just think about it. Every single time you use an ATM, tap your card to pay for something, send money from your phone, or even just check your balance on an app, you're interacting with the end product of this entire system. It's the behind-the-scenes tech, like something called core banking, that connects all the bank branches together and makes it possible for you to do your banking from literally anywhere. It's pretty amazing when you think about it, isn't it? The whole journey, from a huge institution like the RBI making decisions about interest rates, all the way down to you making a simple tap on your phone screen. That entire massive network has to work together perfectly just to make that one little tap possible. So all of this leaves us with a really big question to think about. As technology makes banking faster, easier, and almost invisible, where do you think this is all going? And maybe more importantly, who stands to gain the most as we step into the future of finance?